Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading Corporation. Thank you for tuning into our podcast, where we take a look at some of the changing dynamics in the financial markets, globally as well as domestically. And I have with me my co-host here to do that. And Chris, good morning. How are you?
I'm doing well, thanks, Dean.
I said and because I got a little bit ahead of myself, but this is a doozy we're talking about today. Like, we've had quite a roll. I'd say even a roller coaster ride. If it is a roller coaster ride with the price of gold and the price of silver, we're on that part of the roller coaster where it's just going straight up. So
Yeah,
it's not the scary part by any stretch of the imagination. But here's the thing: you wonder, okay, using that roller coaster example, have we reached that peak, that pinnacle, right before we do start going through the bumpy thing? Well, this article, let's look at it here. This is out of Morningstar. It says, stop watching gold daily swings and get ready for a $10,000 super cycle. Now, that's something to be said. A lot of people look at, gold got over 5 grand an ounce, pulled back a
yep,
little bit. It's in the fours now. And this is all very normal. No market is going to just consistently, per se, go up and up and up every day. There's going to be little
right.
pullbacks along the way. But what they're talking about here is like, this thing is going. And I mean, we're already getting comfortably into the year 2026. And they're talking by the year 2030, we'll be looking at $10,000 an ounce gold.
Yeah,
And as you start breaking it down and looking at the reasons for it, some of which we're already familiar with what's been happening with debts and deficits and things of that nature. But it really, this article in particular, Chris, does a really good job of kind of getting into um you know the kind of what the influence or the effect of what's happening in other countries right now with their economy and things of that
hmm,
nature, how it really is substantial as to why this is happening. And one of the things that I found interesting in here as well, it talks about, and I'll kind of let you get into a little more depth or details with it, but it addresses the whole cryptos thing,
yeah,
cryptocurrencies. And we saw that. A lot of people are surprised that gold didn't take off a lot more quickly than what it did. And a big part of that had to do with cryptos, because there was, as cryptos were kind of, when was that? Shortly after the kind of the real estate correction in the 2010-ish area.
yeah,
Um, that's when shortly after that, they kind of started taking off. And people who were investing in cryptos, they were your typical or traditional gold buyers. And that's where, how people would the market would explain cryptos is, it's like gold, it's tangible, it's private, it's safe. It literally used all the same definition of gold.
yeah,
But in fact, it really isn't all those things, because we've seen now, gold doesn't evaporate, gold doesn't just disappear. Your crypto, that can happen, and it has happened.
right.
The trading platform goes away, and now all of a sudden you're stuck, wondering, are you going to be able to get liquid on this stuff? And it gets into all of that. So I don't, I don't see. And let me tell you something else, Chris. As I read this article, and you
Mhm.
know this because of all the times we've talked about this, it's rare, if ever, that there's been a prediction of what the future price of gold is going to be, that gold hasn't shattered that by a
Yeah,
long shot. Meaning, like, just based on the math of other articles we've covered over the last few years, with them saying $10,000 an ounce by
yeah,
2030, based on, again, just what we've seen, it realistically probably means gold could be as high as 15,000 an ounce, because that's the kind of feeding frenzy that's been taking place there.
yeah. Typically speaking, when most of these analysts throw out a number, they tend to be a little bit conservative. And like last year, I think they were saying we were going to hit $3,000, $3,300 gold, something like that, in 2025. And of course, we blew past the 5,000 mark. And what they would do is, when we were basically on the cusp of hitting one of their predictions, albeit way early, then they would just push it out a little bit more. So I definitely agree with you on that. And what this article is talking about is quite honestly what we remind our clients of quite often. What he's saying here is whether gold's 4,500 or 5,500, isn't going to matter because it's going to 10,000. And I would point back to in the last several years, we had clients that were worried about $1,800 gold or $2,200 gold. Oh, is it too high now? Maybe I missed my window. Maybe it's going to dip. Well, how do you think those people feel now in the 4,800 range? Right? They're not worried about that dip that it took maybe at 2,400 or 2,300. It becomes irrelevant with just a little bit of time to let the asset appreciate. And so that's what I would tell people. Especially if you're checking your metal prices every day, and oh, I made a few bucks, I lost a few bucks. Don't let it stress you out. I mean, the nice thing about gold is it's one of the most relaxing investments you can have, as long as you just buy it and hold it and give it time to appreciate, so that you can sell it down the road when you've made a hefty profit. If you need it, and if you don't need it, let it continue to grow. That's really the benefit of it. But I think a lot of people are so used to checking their 401k statements, maybe logging into their Fidelity account or Charles Schwab account, and seeing what things are doing every day. And it's a bit of a change for people investing in physical gold and silver to realize, oh wait, I don't have to do that anymore.
Right.
So
Right.
yeah, that and you did touch on the Bitcoin and cryptos. I think a lot of people now realize that cryptocurrencies aren't the replacement for gold that they thought maybe they would be in the past. There's been enough time there for people to watch the crypto markets, to see how volatile it can be and some of the security flaws. And you're right. An ounce of gold has never gone down to zero. And we've had plenty of cryptocurrencies that have come and gone in short periods of time.
And
I
stocks for
think
that matter. I mean,
that that's
not to
right.
take
Yeah,
anything away from the
companies that
stock
were
market.
monster juggernauts a decade or 2 decades ago or 5 decades ago that no longer exist.
Right. Right. Well, and the thing about, people wondering if they missed the boat, et cetera,
Hmm.
one of the things that anyone who asks me about gold and where the price is right now, should they be selling, by and large, especially at our company, like the people that we talk to and have talked to over the last 40 plus years about positioning in gold, it was for the reasons that we're talking about, or things that we talk about on our podcast here, where the problem with the debts and deficits, the
Hmm.
problem with the weakening US dollar, the vulnerabilities in our financial system, even, like look at even our equity markets, you've got derivatives and all those other vulnerabilities there. And my point being is that, okay, great. Somebody, even not that long ago, less than 5 years ago, bought gold at maybe 1,200, $1,500 an ounce, depending.
Yeah.
Even when it got just to, it wasn't even maybe 2 years ago, to 3,000 an ounce, and they had doubled their money. Yes, they could sell and take that profit, but again, the encouragement was, well, all those things, the debt, the deficits, the challenges in our financial system, all those concerns you had initially speaking, not only are they still present, but they're stronger than they were even back then. So the
Yeah.
reasons you had before are no less prevalent today and relevant, I should say too,
Hmm.
than what they were back then, and a reason to hold on to. And let's get into the
Right.
second article that kind of gets into this. Um, and these numbers are just, I mean, it's stack. If here's the thing, Chris. If somebody says, "Oh, okay, whatever, $5,000 an ounce gold going to
Yeah.
10,000," that seems crazy. That seems insane. When you couple it with an article like this, it really doesn't. Okay, the headline here: US debt set to crush World War II record as annual deficits explode to $3 trillion within a decade. Now, as you start looking at this, let's see, Budget Watchdog projects debt held by public will climb 120% of GDP by 2036, raising
Hmm.
fears of fiscal crisis. So it took, we talked about this before, it took the United States 200 and some odd years to get basically $30 trillion in debt. Now we're talking, if just based on the projection, and let me tell you something, I don't think you're going to find this to be any better, because anything having to do with our country and our debt is never
Yeah.
better. It's, if anything, it's usually worse.
Yep.
But they're talking about, let's see, the budget will rise. It's an estimated 1.9 trillion in fiscal year 2026 to 3.1 trillion in 2036. But also, you look at the mounting budget deficits that and I'm reading here, but it
Yeah.
will push the national debt higher, with the gross federal debt rising from an estimated 39.4 trillion. And Chris, was 2 years ago, we were at what, 32 trillion, 2 years and change maybe.
Yeah. Or just breaking 30, maybe. Yeah.
39.4 trillion to I just lost my at the end of the fiscal year 2026 to 63 trillion in 2036.
Yeah.
That is unbelievable. I mean,
Yeah.
talk about unsustainable math. And see, the X factor with this whole situation, Chris, is that, you know, with these numbers just out of control, the bottom line is that at what point does the rest of the world just say, you know what, we're kind of done. We're done with U.S. debt. We're done with U.S. dollars, which they already, to a great extent, are doing. But these numbers assume that everybody's going to just keep swallowing the debt that
Welcome
we're
to
feeding them.
AI.
So,
Yeah.
did you
New
hear that?
Commvault Cloud Unity, unified data security.
All
Oh, we
right,
have a video on. Had a video on the screen.
we had a little video, but we're good. CC got it. He stopped it. Anyway, Chris,
Yeah.
tell me your thoughts on it.
Yeah. It's and I think we're also desensitized also uh, with the numbers here, right? Because I remember it was a huge deal when we first hit a trillion
Right.
in a deficit, right? And now we're talking about 3 trillion. We're about to cross two, talking about 3 trillion in within the next 10 years. And like you said, it's normally sooner than that because the politicians want to kind of downplay these troubles. But I don't think people realize, when they hear, okay, 2 trillion to 3 trillion, it's only 1 trillion more. Well, it's a 50% increase. It's not too far away from doubling, especially if we're off a little bit here and hit these numbers even sooner. And it's just such an insurmountable amount of money. Even I don't know if anybody listening to this has ever seen those charts where it shows how much a million is compared to 100 million, compared to a billion, compared to a trillion, and it shows like pallets and pallets of money stacked end on end. And we're talking here about going from 2 trillion to 3 trillion in our deficit. So it is such a big number that I think most people really can't fathom it. And there really is no turning it around from here. It's going to take some serious work from lawmakers, and unfortunately, they never want to do that. They never want to make the tough policy decisions and try to stabilize things. They're usually pointing the finger and blaming the other party, and spending more money just on the things that they want and not what the other party wants. And so it's really going to take systemic change. And a lot of what Donald Trump talked about, especially in his first term, was going into Washington and cleaning the swamp. And I think he's found out while he's been there that the swamp is a lot bigger and deeper than probably even he expected. And
Right.
I really don't know. I mean, I'm hopeful and optimistic because I think we have made some positive changes. But even with those changes, now here we are talking about a 50% increase in the budget deficit in the next handful of years. So and when you talk about all of this, right, it goes back to what we talked about in our previous podcast in the week. You've got Germany and now France saying, hey, maybe we underestimated BRICS a little bit. And sorry, guys, we probably shouldn't have been so quick to dismiss you. Let's talk a little bit more. So when you put all these pieces together, it certainly doesn't paint a good picture for where we're headed in our economy here in the U.S.
Yeah, well, it's interesting too when you start talking about like the comparison that they're using here with World War II. Let's not forget, or let's keep in perspective the fact that
Hmm.
you know during that time when we were running, which now is the competition for where we currently stand. We were in the Great Depression. We had the 1929 market crash.
Hmm.
We were into World War II, as it says here,
Hmm.
where we were already a little bit injured, if you will, in terms of our country and our economy and whatnot. And then you throw the war on top of it, which, that's a whole nother thing where, people suggest that the war was here to get us out of that. But, the bottom line is that at the end of the day, there were reasons we were facing the challenges that we were back then, contrived or not. If
Yeah.
someone subscribes to that, the bottom line is our economy at current is just in our debt, our deficits, and all that is just a reflection of horrendous fiscal management and fiscal responsibility, in large part by our leaders. So, I mean, at the end of the day, we're comparing an apple and an orange, in my opinion, because the two eras were just completely different from one another, and
Yeah.
this one for all the wrong reasons. So,
Yeah.
well, all right, Chris, there you go. Not the most cheery news.
I was going to say, I'm kind of depressed now.
Yeah, but it's part of what's happening. Hey, we started on a high note with gold going to 10,000
That's
an
true.
ounce, so that's
That's true.
might as well end on a real note. And I guess for what it's worth, ladies and gentlemen, the depressing stuff is the reason, if you are a gold investor and you do follow the market, these are the reasons why gold is going to do as well as many of these experts are suggesting. So, thanks for tuning in, and if you're not subscribed,
Yep.
please do so. We'd love to talk to you more in the future. If you haven't contacted us for your free copy of The Secret War on Cash, you can do that by calling or texting 1-800-289-2646, or you can visit us online at www.swissamerica.com. If you're not subscribed, please do so, as we'd love to talk to you more in the future. Other than that, have a great rest of your week, and we'll talk to you soon.
Yep. Thanks, Dean.